How to invest in pre-IPO opportunities. Welcome to this video on pre-IPO investing. Whether you're new to investing or looking to diversify your portfolio, this guide will help you understand what investing in pre-IPO opportunities entails. We'll break it all down for you, step by step, and show you how young professionals like yourselves can take advantage of this exciting but high-stakes investment strategy. Let's dive right in. A pre-IPO refers to the stage before a company goes public, before its shares are listed to trade on the stock market through an initial public offering, IPO. During this stage, companies often sell shares privately to specific investors to fund their operations or scale their growth. For you, the investor, pre-IPO investments present unique opportunities. Imagine being able to buy shares in a company before its potential value explodes on public markets. Companies like Uber, Airbnb, and Facebook all went through a pre-IPO phase where savvy early investors saw enormous returns. But it's not just about the potential for high returns. By investing pre-IPO, you get to support the company in its crucial growth stages, becoming a part of innovation as it happens. However, this is a specialized space, and not everyone can join in without the knowledge, tools, and consideration of risks involved. Which is why you're here. As promising as it sounds, understanding why companies sell shares pre-IPO is important. Typically, companies need funding to achieve their objectives, such as scaling production, expanding operations, or conducting more research and development. Instead of taking on debt or waiting for public market approval, they sell shares privately. For you as an investor, this provides a unique entry point before the IPO hype inflates the stock price. Think of it as getting early access to discounted tickets for an event you know will sell out. Pre-IPO investments are not open to everyone by default. Traditionally, these opportunities were reserved for institutional investors, such as venture capitalists or accredited investors, those with high net worth or annual income benchmarks. However, the world is changing. Accessible platforms and regulations are slowly opening the doors to retail investors. You no longer need to be a billionaire or a venture capitalist to participate. Later in this guide, we'll discuss how regular investors can tap into these exclusive offerings, so stay tuned. Finding pre-IPO opportunities used to be confined to private networks or insider deals. Today, several avenues can allow you to join, even as a young professional investor. Venture capital and private equity firms. These firms often invest in startups and secure pre-IPO shares for their fund investors. Joining them requires capital and meeting accredited investor qualifications. Crowdfunding platforms. With the rise of fintech platforms, retail investors can now access pre-IPO opportunities via equity crowdfunding. Platforms like AngelList or Republic have bridged the gap for small-scale investors, often with lower entry points. Pre-IPO marketplaces. Digital platforms such as EquityZen and Forge Global specialize in connecting investors with pre-IPO opportunities by sourcing private company shares for sale. These are great options for first-time pre-IPO investors. Networking and investor communities. Sometimes, pre-IPO shares are offered informally through personal networks. Joining investor communities or participating in exclusive groups online can provide valuable leads. While pre-IPO investing is exciting, it's not something you should jump into without proper research. Due diligence is key. This involves thoroughly investigating a company's financial health, leadership team, and industry prospects. Here's what you need to consider. Company financials. Examine financial reports and key metrics such as revenue growth, profit margins, debt levels, and scalability. What does the company's current valuation look like? Does it justify the price of the pre-IPO shares? Leadership team. The founding team's experience and reputation can make or break a company's future. Research their track record and their role in driving the company's success. Value proposition. What products or services does the company offer? How unique are they compared to competitors? Look for companies with a compelling, scalable, and innovative narrative. Industry trends. The broader industry context plays a critical role. Is the company poised for growth in a thriving sector, or is it a risky bet in a struggling niche? By carefully analyzing these elements, you'll be better equipped to assess whether the investment aligns with your financial goals. Pre-IPO investments aren't all sunshine and rainbows. They come with their fair share of risks, and you must be prepared. Illiquidity risk. Pre-IPO shares are not traded on public markets, meaning there is no guarantee you'll find a buyer if you want to sell your shares. Be prepared to hold them for years until the company eventually goes public, or worse, folds. Lack of transparency. Unlike public companies that must disclose financials quarterly, private firms reveal very little and are not subject to the same regulatory scrutiny. This makes it harder to assess their health and future prospects. Market volatility. The promise of high returns isn't guaranteed. The company's IPO may not attract investors, or worse, its valuation could drop significantly after going public. Concentration risk. Putting too much capital into a single pre-IPO investment can expose you to severe losses. Diversification is a must in your overall strategy to mitigate this risk. Risk is part of nearly every investment, but with pre-IPOs, you must be particularly cautious, balancing the potential rewards against these challenges. Ready to explore your first pre-IPO investment? Here's a step-by-step guide to get started. Research the market. Identify industries or companies you're passionate about and align with your financial goals. Choose a reliable platform. Sign up with pre-IPO marketplaces like EquityZen or crowdfunding platforms to browse opportunities. Verify their legitimacy and track records. Estimate your budget. Start small. Don't bet more than you're ready to lose. Most crowdfunding platforms allow minimum investments ranging from $100 to $1,000. Analyze the offer. Review the company's valuation, share price, and financial trajectory. Ensure you're comfortable with its growth potential and associated risks. Complete the purchase. If satisfied, follow the platform's process to invest. Keep diligent records of your investment. It's that simple to start. But remember, patience is critical as these investments come with longer timelines for returns. It's helpful to learn from real-world examples of pre-IPO investing, both the successes and the failures. Success story. Early investors in Facebook reaped high rewards when the company went public in 2012. Those who bought shares during its pre-IPO phase saw their investments multiply significantly. Lesson learned: not all companies succeed. Take Theranos, a once highly valued health tech startup that collapsed amid scandal. Investors who bought into Theranos pre-IPO faced significant losses. The takeaway? Even the most promising ventures carry risks, underscoring the importance of research and diversification. Now that you know the basics, it's time to coordinate a strategy tailored to your goals. Align investments with goals. Ask yourself, does pre-IPO investing fit your financial aspirations? If you're looking to balance high-risk, high-reward opportunities with safer investments, this could be a great fit. Time horizon. Understand that pre-IPO investments are long-term plays. Be prepared to be patient and let the company mature. Stay informed. The pre-IPO landscape constantly evolves. Subscribe to industry newsletters, monitor platforms, and stay connected to market news. Investing in pre-IPOs can be a game-changer for young professionals looking to amplify their portfolios. It's not just about the potential for high returns, but also about being part of innovation and growth stories from their inception. However, success in pre-IPO investing relies on education and preparation. Follow the steps, conduct diligent research, assess risks, and start small. With time and patience, you can make informed investments that align with your financial future. The world of pre-IPO investing is no longer just for high-net-worth individuals. Thanks to new tools and platforms, opportunities are within your reach. Empower yourself with knowledge, start small, and take your first steps into this dynamic investment arena today.